All right, so today I wanted to make a video on a stock that I've never talked about before. This is VEEV Systems. VEEV is the ticker symbol. First things first, if you get value out of this video, please like and subscribe. Really appreciate that. So it is in the healthcare sector. It's about a $36.5-ish billion company. Free cash flow yield about 2.6%. Earnings yield about 1.6%. Those numbers are low, but I think that's primarily due to, number one, it's more of a growth stock, and number two, it is a little overvalued for sure. And it's in the life science industry, so it provides industry cloud solutions for the global life sciences industry. So you can imagine, especially in a market like today, this stock's going to be a little expensive. I have it on a watch list. I really do like it. Let's get right into it here. I'll get into what I think fair value is, and we'll go from there. The first thing here, stock-based compensation is crazy high. That's a little concerning, but with some of these names, that's just kind of the name of the game. But that definitely is a bit of a red flag. Profitability is extremely good on this company. All of those numbers are very good. Growth is good. It's not amazing, but it is good. The financial health is really good. This company has a very strong balance sheet. Current ratio of 5 is really, really good, especially in a higher rate environment. A lot of these growth stocks rely on debt or issuing shares, and especially when you're relying on debts in a higher rate environment, that's more costly, and that's costs that are going to get priced into the shares being lower prices. So that's something that you definitely like to see here. They're projected to grow earnings 76% next year, which is really good. Analysts are bullish. A current PE of 59, a current price of free cash flow of 37, price of sales of 14. Those are all really expensive. I mean, a price to free cash flow of 37 isn't crazy expensive, but it definitely is expensive. So let's get into the financials here. If we look at its income statement for starters here, revenue is exactly what you want to see. It is up every single quarter, on it pretty much honestly literally every single quarter going back about a decade or so. So that's exactly what we want to see. Everything's green there. If we look at shares outstanding, they have gone up a little bit, but they're not diluting at a crazy rate, so not overly concerned there. Earnings also have gone up quite nicely. They hit a new all-time high in the second quarter of the last quarter, the updated second quarter of 2024. I guess we don't have, actually, do we have? No, we don't have the third quarter's numbers in here yet. And if we get into its metrics, like I already mentioned, profitability is very good. I mean, a gross margin is 73%, operating margin 22%, free cash flow margin 37%. Those are all really good numbers. I'm very happy for that. Return on equity, return on invested capital. I wish these numbers were a little better. I mean, back in like 2018, 2019, they were in the high teens. They have trended down to basically their lowest level in almost a decade. But 11, 12%, that's not alarmingly low. That's just lower than it should be. Like a company like this should be at least 15%. Like that, they definitely need to be improving that. If we look at free cash flow per share, also has trended up quite nicely. It's basically at an all-time high. Looks like the first quarter of the year was the highest they ever had. So this quarter still the second highest. So they're growing free cash flow per share very, very well. So no dividend here. I mentioned the balance sheet is very nice and pristine on this company. The average analyst actually is thinking that it's undervalued, but the lowest is 22% undervalued. The highest is it's 32% higher. So analysts, this is one that analysts have a very, like almost probably a 40% range on this company. So this is one, like with these kind of companies, I guess you're probably going to expect to see that. I think the company is overvalued, but it's not that overvalued. So if we go into its historical growth rates here, going back about 5 years, it's grown earnings at about 31%, free cash flow at about 13, 14, operating cash flow 20%. The average PE is just under 80. It's currently at 59. So it's actually cheaper than its 5-year average, but a PE of 59, you better be growing extremely quickly to justify that high of a PE. The lowest it's ever got over the last 5 years it was actually this summer, back in, looks like that little mini crash we had in August. 48.7. I still wouldn't pay 48.7 for it. I still think that's too expensive, but that's probably starting to get more in the ballpark. They've also grown revenue almost 21%, which I kind of already gone into. They're a nice revenue growth machine. So if we get into a valuation here, this is based on PE. So I have them growing earnings at 18% per year, which is less than the 5-year average of about 30. They're going to dilute 2% per year. They're going to trade at a 30 PE. That implies that they're about 16-17% undervalued. Even if we project that they grow, let's say 20% per year, that implies that their fair value where they're at right now. So on like the difference between 18 and 20% earnings per year, like that's not that much in the whole scheme of things. But that's the difference between it being 17% undervalued and basically fair value. So the question for this company is how fast do they grow? I mean, if we say they're going to grow 30% per year, that implies that the fair value is 500, and they're more than 100% undervalued. So the market is clearly implying that growth is going to slow. They're implying that it's going to slow to about 20-ish% per year. So I would wait for probably a 10-15% pullback. 15, that's probably where I would start to pull the trigger. Just my opinion here, these kind of companies you kind of have to be a little bit careful with because they're growth names. Growth names are more risky, but with higher risk, if you find a really good company, typically that comes a higher reward. So anyway, that's what I wanted to talk about today. This is VEEV Systems. If you liked the video, like I mentioned, please like, subscribe, comment, all that good stuff, and stay tuned for more.